Eric Muathe for the weekend of July 26th and July 27th. Let's take a look at how markets closed on Friday. The Dow was down 123 points or 0.72%. Nasdaq was down 0.5%, and we see that S&P 500 was down 0.48. Gold was up a percentage point. We see the VIX closed up about 7% to the upside. For the week, the S&P 500 was unchanged. No move in terms of percentage points. If we take a look at the Dow, it was down 0.82% for the week, or down 139 points. And the Nasdaq for the week was up 0.39%. Before we continue with the weekend analysis here, let's take a look at some study example here, and this is by way of the RSI, and I'll show you one stock example. Whenever you find that over time, especially if you're looking at a weekly chart or a monthly chart, if you find that the RSI establishes some type of a support line over time, maybe spanning over many years, over many months, you'll find that this area where the market bounces on the line tends to be good areas where the price tends to rebound and head higher. What you'll observe is that at some point this line is broken and the stock starts going lower, so the stock will start showing signs of stress once this trend line is broken here. And what you'll observe in many situations is now what was support becomes retest, and every time the market hits that line and starts moving back, that tends to be a nice point to sell the stock. And especially if it comes back again and does the same thing, hits that line here, you can be on the lookout for a reversal, because the stock is also going to go down because of this back test of this line, which is now become resistance. A good example of this is Amazon, and this week it was down about 10%. Just wanted to show you that there was a break of this trend line here on the RSI. If you draw it like that, so there was a break here. This is one way you can look at it, and I'll show you the other way from the previous graphic. So you see there was resistance here from the previous breakpoint. Previous breakpoint took place here. So once it came and hit that level here, that's uniform activity on the line. So that's a short-term high there. And you can see this week it's formed this type of a resistance here, and which happens to be the reason why, in my opinion, it's down as much as it was this past week. Now, if you take a, this is a 2-year weekly chart. Let's take a look at a 3-year weekly chart for Amazon, and you'll see the line I was talking about on a back test, the same chart. So now you draw it this way. You can see that we found resistance once here, which was this high here. And you can see this week back test failure here, which is also this high, and the reason why it's down. Now let's go back to the lows, a weekly chart showing the lows of 2009, and you can see from the lows here to a straight line like that, you can see that this has been support most recently. Support here, which was this nice entry point here, support here, nice entry point there, and ever since we broke down here, which was this level here, this has turned into resistance, as you can see again here, which was that high, and now we are seeing another resistance level there, which was this high. And don't forget, one of the reasons why it's down a lot this week is because it slashed below 50 on the weekly RSI. So all this just to show you that sometimes very simple lines on the charts can actually guide you in a stock or out of a stock, depending on how the line is telling you whether there's going to be resistance or support. Now let's go to the Nasdaq weekly chart as we take a look at how the market looks on the annotations. You can see that the Nasdaq now has a new weekly breakout level of 44.85, which is this weekly closing high about 4 weeks ago. If the market can move above 44.85.93, that's a breakout level that we have to be very respectful of, because as it moves above that, it's going to be really picking up momentum. There's also this line here, this line on the weekly, has been where the market has been pulling back here, which was that high there. It touched the line there, which was that high, on and on. So this is where the market has been pulling back over the last couple of years, and recently we hit that level there, and that was the high there. So we can see that the market being very close to this line here. If it holds above the line, that's good for the bulls. If it can't move above the line, then maybe we are due for a pullback. That's as simple as I see it. If you take a look at the Nasdaq daily, you can see here there was an attempt to make a higher high this past week that failed, and you can see the RSI is way off from where the previous high was made. So this could be a problem. It could be negative divergence. The one thing I can say is that as long as the market is holding above 0 on its MACD levels here, which it's doing right now, that's the main MACD, the default MACD setting. As long as the market is holding above that, the market should be okay in terms of momentum to the upside. We are also trading above the 50-day moving average, and we are also trading above the previous daily breakout level here, and that daily breakout did hold here and here, so which means that this breakout continues to be in full force because it's trading above the breakout, trading above the 50-day moving average. So it needs a lot of damage to be done if the market is actually going to pull back significantly. If you take a look at the hourly for the Nasdaq and draw a straight line connecting the lows, and you can, every time we've been above this level here, or this RSI support line, the market has bounced. We touched that line there, which was here. We moved above it here, which was here, and recently above it here, which was that entry point, and now we are trying to move back above that line. So that's one level of resistance you can look at on an hourly basis, and also you can draw the lows line on an hourly basis and see that the market is holding support exactly where support needs to come on the daily charts. A quick look at the Dow weekly, and we can see here this has been a problem. We've been making higher highs over the last couple of weeks, but the RSI continues showing resistance line, and you can see multiple layers of bumping heads with that line and not moving above the line. So if that continues being the case, and the farther away we drift from this is going to turn into a serious sell signal, or at least short term, because the market should be at least clearing this RSI top lines. Right now it's failing to do so. So the thinking here could be that eventually we do get that pullback. If you take a look at the daily for the Dow, I think there's a slight breach here on this line, which was the lows line, which was holding the market together over the last couple of weeks, last couple of months, and we seem to have broken that. So we need to see whether it's going to lead to further selling, but this could be what starts pushing this market lower. And don't forget, we made lower lows on the RSI on the daily when the market was making higher highs on the daily. So negative divergence plus a break of this short-term level here could be a problem on the market. We also need to see how the market is going to respond if it comes to the 50-day moving average. Right now it's holding above that, so we should not be too worried about immediate serious selling because we're above the 50. We had a slightly big down day, not the biggest ever, of course, because we slashed below 50. So if the market can move above 50 sometime next week, expect to have a big up day, relatively speaking. If you take a look at the MACDs for the Dow, you see that we are very close to moving below 0, which could change the dynamics and the market might start going lower. And also, if we can get this MACD here to coil and point lower and trade below 0, that could be a problem. Right now, the market can actually change directions of these MACDs, but for now it looks like they're pointing lower. So the thinking here is that don't be too surprised if we start the week, or at some point in the week we start getting more pressure to the downside. Nasdaq or the Dow hourly chart, and this is good news for the bulls, because on this green line here You can see this is where the market has been bouncing all the way from February of this year. Every time the market has come to these levels, it's found a nice support on the hourly, on the RSI. It hit that level recently, which was that low, came close here, which was this low, came close there, which was that low, and you can see as of right now that is holding. So if that's the case, the market could actually start moving higher just based on the fact that the hourly looks like it's not breaking down. As far as the S&P 500 is concerned, this is the S&P 500 weekly. We have this channel here, and over the last couple of weeks, maybe about 1, 2, 3, 4, 5, 6, about 6, 7 weeks, the market has been unable to move above the top side of that weekly channel, and you can see that more than likely this might turn out to be resistance because the market has found it almost impossible to close above that level. So that being the case, we have to assume eventually a pullback is due based on the fact that this is good resistance. It's been established over a couple of years going back to 2011, and the market has failed to breach it. More than likely we get a pullback just off that formation. If you go to the daily for the S&P 500, we see here higher highs in price on a daily chart, and yet the RSI is made a lower low. So that's not a good divergence and usually leads to a market going down. If we take a look at the S&P 500 hourly, you can see that just like the Dow, this level here, the green level here, or this green line, has been where the market has been finding short-term lows. Very successful short-term lows, especially if you're a day trader, short-term trader. This is where you had to go long or to buy long equities because the market's been bouncing off this line and continues to do so over the last couple of months. And you can see into Friday's late session, this held. So that the fact that it's holding above that line could suggest that the market is due for move higher on an hourly basis. Also, if you take the lows line, connecting the lows of the RSI here, remember I'm using a period of 21. Sometimes I use 26, sometimes 21, so I can get most of the noise out of my charts. But seems like if you draw a line here, you see that they are connecting the lows very well. And unless this is broken, if the market breaks it, yes, a pullback takes place. But now that it's holding above that line, holding above the green line, that's a lot of support. More than likely on an hourly basis, the market wants to move higher. The strongest argument I have for why the market is safe in terms of this bullish trend is because if you take a look at the VIX, there's no buy signal on the VIX. This is the VIX hourly, and you can see it's been finding resistance on this line, and that resistance was here a couple days ago, even about 2 weeks ago. And once it hit that level, that was resistance. Market was a good buy since then. And you can see that also there is this line here which has been also been resistance. So the VIX has not given us a buy signal. It's only when the VIX breaks above that line, holds above it, that the market could be in trouble. Right now it hasn't done that, so we have to assume that the market is safe as far as the bulls being in control. Now if you go back and take a look at the monthly for Apple, you can see that it's starting to pick momentum. 5% gain this month so far. Why? Because the monthly RSI is moving above 69.10. The last time it did that was this period here, where it stayed above 69.10, and that is from a price of about $30 post split all the way to 90. So the fact that it's back above 69.10 and the fact that it's holding above our previous monthly closing high of 91.48, the stock should continue moving higher as long as it's trading above 69.10 on the monthly RSI. Now let's take a look at the markets here in terms of their monthly RSI. Begin by taking a look at the S&P 500. On the monthly, you can see that the S&P 500 is holding above 69.10, hence the strength, hence the momentum. If you take a look at the Dow, on the monthly, it continues holding above 69.10, and that's why it's been very strong and stays strong. If you take a look at the Nasdaq, you'll see that also on the monthly, its RSI is holding above 69.10. So because the markets are doing well on the monthly charts is the reason why it's very hard to take this market down. And so it's only when the monthly RSIs move back below 69.10 that we might get a sell-off. Remember, even on this chart, you can see the last time we had a high here was late 2007, which was this high here, and that's one of the reasons why from a technical standpoint we had this pullback in 2008. So as long as you're holding above 69.10, that just tells you the market is safe to the upside.